You can see here that we went from about $90 in the end of 1973 to about $180. That's a 100% move by the beginning of 1974. That was about 4 to 5 months. And that puts gold at a target of about $8,000. And silver, of course, should go even faster than that. Hey guys, Rafi here from the Endgame Investor, and today we're going to talk about gold's correction looking almost exactly like the bottoming pattern of 1973. I'm going to show you two charts. They are almost the spitting images of each other. It's uncanny. Does that necessarily mean that we're going to repeat the exact pattern of 1973 right now? No, nothing is ever exactly the same. But if we are generally in that pattern, after the correction of 1973 was over, we had a 100% rally. So if this pattern completes, and there's no guarantee that it will, but if it does, then we're looking at $8,000 gold by the end of 2026. That and two big bubbles appear to be popping or have already popped, and that is first Bitcoin, and second, the semiconductors, or as we like to call it, AI these days. It's looking bad for the big bubbles, and once those pop, gold should recover. And how? And before we start the slides today, the best way to support this channel is through Monetary Metals. If you want to earn gold and silver in interest, in gold and silver terms, on your gold and silver, check out monetary-metals.com/Rafi and support this channel, and you will earn a gold and silver yield on your gold and silver savings. And yes, I understand that not all of your stacks should go with Monetary Metals. You should have some with you, which is why you should also have a Dirty Man safe. Use the code ENDGAME10 in the description below at checkout and support this channel. In the meantime, let's start the slides and I'll show you what we have to look forward to in the gold market and the popping of the two humongous bubbles, AI and Bitcoin, which are intimately related. The first slide, we have an article. I'm not going to tell you the date. That's a surprise, but check this out. MicroStrategy chairman accused of fraud by the SEC. Michael J. Saylor, this is from the New York Times, actually. Michael J. Saylor, remember him? The chairman of MicroStrategy, a software company whose share price soared and then collapsed after the company was forced to restate its books and erase all the profit it had reported, was accused of fraud yesterday by the Securities and Exchange Commission. Mr. Saylor settled the civil charges that were filed in federal court in Washington without admitting or denying them, and agreed to pay $8.3 million to shareholders and a $350,000 penalty to the SEC. The SEC contended that Mr. Saylor and two other MicroStrategy officials, who each agreed to pay $350,000 in penalties and to pay a total of $1.7 million to shareholders, had committed fraud in reporting profits when the company was actually losing money. Now, let's go to the next slide, and you'll see when this article was written. Well, it's actually by Floyd Norris from December 15th, 2000. Yes, that is about 7-8 months after the collapse of the dot-com bubble. That was Michael Saylor, chairman of MicroStrategy, as he is today. Is he still the chairman, or is he just I don't remember. That might not be accurate. But anyway, it's accurate enough. This is a chart of MicroStrategy going back to 1999. You see that this is not his first rodeo. This is not his first major bubble. It looks to be his second, or you could count it as third. And it looks like it has collapsed for a third time. This was the initial Bitcoin bubble over here when MicroStrategy started to buy Bitcoin. I think this is the crypto winter over here. And this is the move to December 2024 highs of 100 and whatever $1,000. And now we're back to, I think this chart is a little old, so it could be even lower, could be higher, but it's around there. Usually when people like this get in trouble for ripping investors off of money, they tend to do it again if they can. And so, those who bought into it this time, especially if they were in the dot-com bubble 26 years ago, can I say that they deserve to be ripped off again? Maybe. Fool me once, shame on you. Fool me twice, won't be fooled again.
Shame on Shame on you. It fooled me. We can't get fooled again.
But anyway, now that we've gone over Saylor's historic honesty and his pristine record of pumping up bubbles, gold to stocks pivot point. Is gold going to recover? Well, I don't know anything for sure, but yeah, I mean, it will recover eventually. That I don't know for sure. Will it be now? I don't know for sure. But we have this chart, the gold to stocks ratio. This is the gold to S&P 500 ratio. The higher it is, the more expensive gold is relative to stocks, or the cheaper stocks are relative to gold. You can see that this point that we are on now is a major pivot point going back to the beginning of the current bull market in the end of 2015. You can see here the gold to stocks ratio over here hit twice this around this level, and then zigzagged around it from the year and a half, and then hit it again as resistance, and then broke above it very briefly during the lockdowns, and it was resistance again in 2022 and 2023, and finally broke through at the beginning of 2025. Not even that spectacularly. This is just the beginning of a rally here, but now it's been support since 2025. And it looks like it will remain that way. And we should start seeing a recovery of gold relative to stocks. That doesn't necessarily mean gold is going to go up in dollar terms immediately, but it does mean probably, and I hope, that the value of gold will maintain relative to stocks, meaning if stocks go way, way down because a bubble is popping, then gold will go down a lot less in dollar terms until, of course, they reinflate the whole thing as they do all the time, and we end up in a crack up boom, which should be after the next reflation. The Bitcoin at crypto winter silver levels. This is a silver report after all, so let's talk about silver for a minute. Well, this is Bitcoin priced in silver. How many ounces of silver for one Bitcoin? You can see that we've been stuck in the crypto winter levels here of late 2022, early 2023 since the beginning of 2026, where Bitcoin has deflated and silver has been relatively stable relative to Bitcoin. We're about 1,000 ounces per Bitcoin. Could be a little bit lower than that. I think this is a week old chart. But you see here, it's not really silver that's falling. It's a lot of things that are falling, including Bitcoin. It's pretty spectacular over here. I don't think Bitcoin is going to recover this time, not in silver terms, maybe slightly in dollar terms, depending how low the dollar goes. But in silver terms, I think this is a fair resistance level, and gold and silver are going to recover in dollar terms before Bitcoin does. That I'm pretty confident about, though nothing is for certain. Bitcoin in dollar terms is struggling at the 200-week moving average. It now looks like resistance instead of support. So we broke through the 200-week moving average in Bitcoin following the Bitcoin winter over here in early 2023. And we haven't gotten near the 200-week moving average, but we broke through it I think in March, maybe early April, and we haven't recovered above it yet. So it looks like it's acting as new resistance. This is a very bad technical sign for Bitcoin, a bubble that I believe has already popped and is now deflating. Now, remember what I said at the beginning of the video, the 1973 gold bottoming pattern here. So we see on top is the current gold chart going out to July 2026, which is where we are now. And on the bottom, we have gold daily 1973 from Gold Charts R Us. They do gold prices year by year, pretty useful charts over here. So everything is kind of offset by a few months. But we see here, the short, it's pretty uncanny actually. We see here a little bit of a double top. I think this was the 5600 top, and this is a 5350 double top over here, very close double top. We saw very similar action in 1973, and then a plunge down to here. Support was about 90 or about 93 maybe in 1973. Support here at about 4,000, 4,100 in 2026. And then we had a little bit of a recovery as we did over here, and then a little up and down movement. Hard to describe in words, but you can see here how the pattern is similar in the black diamonds over here that I connected with that little line. And finally here, we had a little bit of a double bottom, hanging out at 90 in 1973, hanging out at about 4,000 in 2026. And in 1973, after that, that was the final bottom. And into 1974, gold moved about 100% going into the end going into the next 4 or 5 months, actually. So that would correspond to about the end of the year 2026, about December 2026. So that means if this pattern completes, and there's a decent chance that it will, if it does complete, then we're looking at a target of about $8,000 for gold by the end of 2026, which is why I have some options plays operable now in gold. Check that out at the Endgame Investor. Link in the description below if you want to know what I'm doing to try to take advantage of this. I do play a little bit of the derivatives game, but not too much because I want to stay in the game, though most of my stacking is, of course, physical and I don't mess around with it. Still, this might even be more shocking, especially to those who think that it's manipulation every time that gold goes down when inflation goes up, or what people call inflation, meaning rising consumer prices. How can rising consumer prices be concurrent with a falling gold price? Doesn't make sense. But if you look at the 1970s, this is before, mind you, before futures markets even existed in gold. That was in December 1974. This is before that time. So we see here in the blue, we have the gold price from 1973. In the red, we have the month-to-month inflation rate. So sequentially, what inflation is that month. Now we see here the red line goes way, way up to about 1.8% annual. That's 18 times 12, whatever that is. It's more than it's about 20% inflation, or more than that, whatever 18 times 12 is. I don't want to do the math in my head right now. You can do it yourself at home by pausing this video and taking out a calculator, but it's more than 20% annualized inflation. This number of 1.8% came during the oil embargo that was triggered by the Yom Kippur War of 1973, October 1973, bringing prices of everything way, way higher. And what was gold doing at the time? Well, you can see we hit a high here of about $125 in the blue. And as inflation was spiking, as consumer prices were spiking to 1.8%, during the oil embargo, the initial oil embargo, gold was falling as it had fallen here from about 125 to about a bottom of about 90, as we saw in the previous chart, showing the bottom in gold at about $90. This was when sequential inflation was spiking to records that have not been seen since, not even including the COVID lockdowns or the COVID reprint, I should say, the COVID inflation round, which brought consumer prices way, way higher, not as high as this. And you can see that pattern slightly less clearly, but you can still see it in the year-over-year statistics. The red line, and this is the year-over-year inflation rate, quote unquote, in terms of the Keynesians say it. But really, it's the rising consumer prices rate, which is not an exact rate. But you can see here the blue is the 1973 correction. Again, we have here from 125, 130, whatever it is, to about $90. This is exactly when the red line in consumer prices, the inflation rate as it is called, was rising and rising and rising. Nonetheless, gold had a major correction here because it's not completely one-to-one lined up exactly. It never has been, and it wouldn't be now. There's always a little bit of a delay, and that is what is going on now. It's going to end, and if the pattern from 1973 completes, as it did here in 1973, of course, because it was 1973, you can see here that we went from about $90 in the end of 1973 to about $180. That's a 100% move. By the beginning of 1974, that was about 4 to 5 months, and that puts gold at a target of about $8,000, and silver, of course, should go even faster than that, which is why I also have some silver positions on play in the Endgame Investor portfolio. Check it out in the link in the description below if you want to know what I'm doing. 100% rally. Let's see if it repeats. And maybe, just maybe, Trump's cutting off of trade with Spain, I don't know if he can do that legally or if it's going to happen. This is what he just said today because he's upset with them regarding NATO or something. Maybe that's enough to pop the AI bubble. The semiconductors index has been going down sharply for 3 weeks now. It could already be over, folks. And once it's over, there's going to be deflation and gold's going to recover, and then there's going to be a reinflation. And my thesis has been there's only going to be one more major reinflation after a financial crisis, and that should be the end game. Let's see if it's finally coming. And before it comes, you probably want to check out Monetary Metals, link in the description below, and support this channel. Earn gold and silver ounces on your gold and silver. And if you want to keep some with you, which I do myself, then get a Dirty Man safe Link in the description below and use the code NGAME10 at checkout for 10% off.
I will now perform my people's native dance.